Hey everyone, welcome back to the channel. Today we're going to take a look at Coinbase. So if you're not familiar, they direct listed today at $250 a share, about $65 billion market cap. And then once the day started trading, stock traded up 31% today, with giving the market cap of 87 billion. Pretty interesting. I pulled together actually 3 cases here. I was lazy and didn't embed this all into one model with like a switch. So you'll have 3 tabs if you download the model. But our bear case, we get about a $4 billion valuation. Base case, which I think is probably reasonable, about a $18 billion valuation. And then in our bull case, you're getting a $76 billion valuation. So even in this one, we still don't quite get to their valuation. And I'll walk you through real quick how we get these, and then feel free to ask any questions or download the model and poke around in it. So first thing, just kind of, as always, income statement gets pulled in from their filing. So I'll link to the filing as well if you want to read through it. Pretty interesting stuff. Majority of the company is owned by insiders still. So pretty typical with a lot of these hot tech startups that direct list or IPO. But revenues doubled and they become profitable. So going from a loss of 31 million to 322 million of net income, which is encouraging. And then assets that they have on their platform, it's gone from 7 billion to 90 billion from 2018 to 2020. And if we look at that, right, we'll see at 2018, where's December 2018? What was Bitcoin at? It was, you know, 30, call it 3,700. To the end of 2020, it was at 32,000. So it's gone up tenfold. And if we look at kind of the value of their assets, not quite up tenfold, or sorry, up a little more than tenfold from 2018. So yeah, I mean that's a positive side. Their more assets have come onto the platform. So that's a good thing to see. And if we look at their trading volume, right, 103 billion to 200 billion in trading volume, and it actually dipped last year. And I mean, I'm sure if we look at the chart for 2019, it spiked in 2018. They probably had a lot of volume. It went down, and then it was just kind of flat, right? And then in 2019, slowly kind of came back up. So, anyways, current volume 193 billion, which is important. This is how they derive most of their revenue. So they have 3 portions of revenue: transaction revenue, which is 90% of this, subscription and service revenue, and then other revenue for a total of 1.2. So I'll walk you through here first the base case. What we've laid out here is the institutions they have on the platform. So this is how many different institutions trade. Currently there's 7,000. Back in 2017 they had 1,000. This was buried in their filing. They didn't give us 18 or 19, so I just evenly spread it based off the CAGR, which I think was like a 100 or a 65% CAGR gets you to this. So there's that. And then from here, just kind of growing the institutions on the platform and I know it looks silly, but these numbers are all in millions just to kind of keep everything consistent. It looks like they average about 200,000 institutions or 2,000 institutions a year joining the platform. So I just kind of left it at that. So you get up to 27,000 institutions on the platform by 2030. And then the average transaction volume, this is driven based off the change in the broader crypto market, is what I would call it, like the market cap of cryptocurrency. So the way I've done this is, right, this year they traded on average $17 million of cryptocurrency per year per institution. So what I've done here is there's expected crypto growth. If cryptocurrencies increase 10%, the just general total value, then we would expect the volume to grow 10%, assuming they're making the same number of trades. So that's kind of how I've approached this. They don't give us enough detail to try to break out like the average, or they don't give us the number of trades. So we don't know if like the average size of trade, how it's been actually shifting here per se, because we don't know the number of trades. We just know the total transaction volume for institutions, and we know how many institutions are on the platform. So you get a rough average transaction volume per institution. So from here, we're saying, if crypto grows 10% a year on just broadly speaking, that total market cap of cryptocurrency, and 10% feels pretty safe and fair. It's kind of like the S&P 500 before inflation kind of growth rate, right? Then here's the institutional trade volumes, and we do the exact same thing for retail, right? So we have our total number of retail users, We have the number of users that transact monthly. And so this actually I have kind of decreasing as more users join the platform. This number is going to reverse down. So you could adjust that assumption. And then the average transaction volume, this is the same thing. This is just a calculation based off the change in price. And then, so, you know, I mean, this is all just a big math equation. You feel free to look through it, but you'll get about 315 billion of transaction volume from retail users on a base of 93 million users, with about 5 million of them trading actively every month. So from here, you get the total transaction volume, and then we have our average transaction fee. So we actually have this decreasing just slightly every year. The reason for that being is as you grow and scale and more users are there and there's more competition, the fee you can charge on every transaction will decrease. So anyways, we have them going from 1 billion to 7 billion in revenue for transaction revenue, which is their main driver. And then the subscription and service, right? I just put in some growth rates here. Feel free to play with those, but you get about 8 billion total. So that's going to give you your base case. I'm not going to walk through the math when we talk to the next ones, just some of the assumptions, but they get you about an $18 billion valuation. Obviously, right, you could, and you can come look at these. I've just held all these assumptions constant for now. They're a profitable company. These things might change or decrease slightly, but not going to be super material to the broader impact of the company for the sake of this exercise. So bear case, same thing, just assuming crypto crashes 50%. So we're going to see, you know, Bitcoin go from 60,000 to 30,000, Ethereum from 2,200 to 1,100, etc. Right? So if that's the case, right, and then you have it just slowly decreasing every year, and then after a while we just say, okay, it's going to stop decreasing and just kind of stay flat, right? Basically, what we're saying is by 2030, their revenue is stagnated, it's flat. Cryptocurrency didn't become this mainstream thing like it has in the last year. We kind of revert back to like that huge spike in whatever it was, 2018, 2017, where we spiked and then we dropped back down to what, 3,000. So right, if we drop down to $3,000 per coin and or back to a 2019 state, right? That's the bear case. Um, in that case, this is a $4 billion company. Um, so there you have it. And then the bull case, right? The big assumption here is expected crypto growth. This is like those fanatics that think Bitcoin will be trading at $1 million. And if we looked at this, right, if we say it doubles next year or by the end of this year, so it's at 120,000, and then from here, you know, then you're up to like what, probably 200,000, 300,000, 360. You know what I mean? This has Bitcoin approaching $1 million by 2030, and you could kind of map out, right? You could put in the current Bitcoin price of 2020 and map this out to see what you get. But in this case, right, the bull case, you get a $76 billion valuation. So you know, I think Coinbase is a really interesting thing because their business, and if you read through their S1, it just repetitively talks about how much their business is tied to the price of cryptocurrency. If cryptocurrency goes up, they will do very well. If cryptocurrency goes down, they will do poorly. It's as simple as that. And you know, I've tried my best to layer in this where you can kind of bake in the assumption for cryptocurrency changes and kind of get to evaluation based off how you believe cryptocurrency is going to change. Honestly, you know, I think it's an interesting company, and I think at the current valuation, you know, I would wait for the hype of the IPO to die off. And if I were to invest in this, right, I would wait for them to come back down to kind of that $250 range, which you know, I think they will. And from there, even maybe if they like, right, you wait till Bitcoin kind of dips or something and there's a big sell-off or people get scared. You know, I think this could be an interesting play because I think cryptocurrency is here to stay. I don't know how bullish I am. Um, you know, I, interestingly enough, actually mined Bitcoin back in, it would have been 2000. It was before its first run up to $1,000 ever. So when was that? It was at $100 when I started mining it. I think it was like it was the summer of 2012, I want to say. Yeah, this doesn't even go far enough back. Summer of like 2012 or 2013. I don't remember, but mined it because I read about it and on a forum or Popular Science or something at the time. I ended up with like 4 or 5 Bitcoins at the end of, I was mining like 1 Bitcoin a month off my graphics card on my computer, something like that, and had 4 or 5 of them after a few months. And then I remember it shot up to $1,000, but there wasn't really exchanges yet. So I ended up actually selling it for Amazon gift cards, or there's exchanges, but they're sketchy. So I sold it for like Amazon gift cards, right? And I cashed out and had like $5,000. Obviously, I wasn't a believer. I just thought it was this cool thing, thought it'd be fun to kind of experiment with it, see how it worked, mined a handful of them, and then sold them as soon as I could for any substantial real money. So, take my projections with a grain of salt, I guess is what I'm getting at there. But yeah, no, I think this is an interesting play in the crypto market. Um, and regardless, right, they'll still be a company. The question is just at what value. So yeah, hope you found this useful. If you have any questions or comments, leave them below. Always love feedback and thoughts on some of this stuff. So thanks for tuning in.